House hacking for Australians. If you have been following the minimalist lifestyle on YouTube, you have surely heard of the term house hacking. However, most of the videos out there are made by people in America. So in this video, I will firstly define house hacking in America, in case you have not actually heard of this term. And secondly, I will try to adopt the American concepts to Australia. Hello everyone and welcome to mangomonkey Learns Money, where I try to help ordinary Australians and ordinary citizens of the world become a millionaire in your 30s and retire early. House hacking is essentially a concept where you buy a home that you live in, but then you rent out some of the rooms, one or more of the rooms, to other people and collect rental income. So you buy a duplex or a triplex or a quadplex, which is basically a house with 2, 3 or 4 separate dwellings with their own entrance doors, their own kitchens and so on. In America, the government provides a government-insured loans with only 3.5% deposit if you commit to living in the property for at least 12 months. So what house hackers over there do is they buy real estate with only 3.5% deposit. They pay a higher interest rate and a mortgage insurance premium, but with this, they can invest the rest of their savings into the stock market. They live in the house for 12 months, and after that, they move to another property, which they buy with another 3.5% deposit. So they can buy a lot of properties with a small down payment if they keep moving home every 12 months. And each time they move into a new property, they rent out the extra rooms if it is a single family home, or they rent out the other dwellings if it is a duplex, triplex or quadplex. So there are essentially two elements of house hacking. The first element is you rent out the spare rooms or the spare dwellings, so you get rental income, and in many cases the rental income is enough to cover your mortgage repayment. So you essentially live for free. The second element of house hacking is that you buy another property every 12 months with a very small deposit, a very small down payment. This way, you can buy a lot of properties very quickly and increase your net worth very quickly through leverage. So even though you pay a higher interest rate and pay a mortgage insurance premium, the cash-on-cash return, the rental income and capital growth you obtain as a percentage of your down payment is much bigger. A complete house hacking therefore incorporates both of these elements. A partial house hacking may only incorporate one element. Let's talk about the first element. In Sydney, if you are looking at an apartment unit, you can get an older style 2-bedroom apartment for around $600,000 Australian dollars in most suburbs. You can probably rent out one of the bedrooms for $300 per week, and if you put in 8% deposit, your mortgage repayment is going to be around $500 per week. So that leaves you with a $200 weekly shortfall. You can then rent out your living room by adding a partition for the tenant. A lot of students actually live in the living room. You can get at least $100 a week and perhaps $150 a week. This means you only pay $50 a week to live in your apartment. A website you can use to advertise your living room is Gumtree or Facebook Marketplace. Or sometimes you may have an ethnic group like your Chinese group and Indian group in Facebook or another website or another app, and you can advertise there as well. Now let's talk about the second element of house hacking, which is about buying another property every 12 months with very low deposit. In Australia, as of today, the lowest deposit home loan requires a down payment of at least 5%. This comes with a high interest rate of around 4%, and the lender's mortgage insurance, which is a one-off cost, is gonna be around 3% of the property purchase price. This insurance premium can be added onto the loan amount if you go with a bank that allows this option. So you effectively borrow 98% of the property purchase price. Only a couple of banks will allow you to do this kind of thing, with almost all other banks requiring you to contribute 8% deposit. Plus, if you're not a first home buyer or if the property falls outside the price cap, you also need to pay what's called a stamp duty to the government. In Sydney, the stamp duty is approximately around 4% of the property purchase price. This type of low deposit home loan is also only available if you are going to live in the property you are buying. But unlike in America, there is no black and white requirement for you to live in the home for at least 12 months. There is a requirement for you to live in it for at least 6 months if you want to get the stamp duty concession from the government as a first home buyer. But in terms of the bank and the home loan, there is no minimum time period to qualify for the home loan with 5% deposit or with 8% deposit. In Australia, it is very rare to find a triplex or a quadplex. You can still find a duplex easily, but I believe most duplexes here have separate property titles. In other words, the duplex here is actually made up of 2 separate properties, and they normally have 2 separate ownerships. This means buying 2 duplexes is usually more expensive compared to buying a house that has twice as many bedrooms. If the duplex only has 1 property title, that means only 1 ownership, some banks will require you to put in more deposit compared to if the property has 2 separate property titles. Apart from duplexes, you can also find dual key apartments in Australia, but also most banks will need a bigger deposit for those. A third option is for you to buy a house with a granny flat at the back, and I believe you can still get a loan for a house with a granny flat with 5% or 8% deposit, but you may want to double check that. So in summary, I think house hacking in Australia can still work. It is not as good as in America because you need at least 5% deposit, and realistically, if you want to get a pretty competitive interest rate and get a decent sized home loan, you're going to want to put in 8% deposit, because when the interest rate is higher, the loan amount that the bank approves you for is going to be smaller. The loan amount is going to be too small. Also here in Australia, you don't see that many multi-family homes, so chances are you need to share your kitchen and living room with your tenants. You can still house hack with a 2-bedroom apartment if you do not have kids, and I think that's a great starting point. You can also buy a house with a granny flat and rent out the granny flat, or you can be the one living in the granny flat. It still wouldn't be free, but it should be pretty cheap. If you enjoyed this video, please do share it with a friend. And don't forget to smash the like button before you go. Have a lovely day.